How's it going, everyone? It's been a little bit since we've done an overall portfolio review, so that's what we're going to do today. We're calling this the $21,000 Robinhood portfolio as we do because guess what? I don't care about this dip today. It was at $21,000, so just give me some credit. We're going to go into every single position here. I'll show you cost basis and if there's anything significant about it. So we go right ahead and go for it. We look at all time, obviously important to see. All time up $5,963.39 or 40.71%. And that is since the dawn of the portfolio in July of 2017. That's right. Wish I had started sooner. Yeah, I do. But we take what we can get now. We're solid, solid 3 years in. We're happy with ourselves, and we're going to take a look at what this portfolio's got going for it. First position is Apple. Recent stock split since the last time I did one of these. So overall, my average cost, it did update obviously with this split. Average cost of $43.70 a share. We've got 20.5 shares. That's 11.26% of the portfolio, with a total return of $1,423. Which is the equivalent of 158%. So I'm up 1.5 times on this portfolio, or 2.5 times, I should say. Over doubled my money. We like to see that. We love more than doubling. So very happy with Apple. Would be a position I still consider adding to, but it weighs so high on my portfolio already. I haven't been adding much besides $50 last week, I believe. So next we have Disney, which is 99.25 on the cost basis. Overall, 4.1% of the portfolio, 7 total shares. Nothing partial on this one. That's right, no partials. For a total return of $150.58 or 21.67%. Nothing crazy. This one's been relatively stagnant, but I do like the long-term picture for this company. I really do. After then, we have Facebook, another pretty good performer for us. Cost basis of $165.29, 9 total shares, makes up 11.22 of the portfolio, 11.22%, for a total return of $824.81, or 55%. Good return on this one. We love to see that as well. Microsoft, another beast of the portfolio. Average cost of $92.62, 4.34 shares, obviously with some partial purchases made in there, 4.3% of the portfolio, up $491 or 122%, more than doubled the money on this one too. Love that. Love that. Had it pretty much since the dawn of the portfolio, so that's why. After then we have Cloudera, not a major position, but one I opened up this year in the summer. $7.90 as the cost base on this one. 15 shares. Total return of $41.45 or 35%. Nothing crazy, but a good percentage return on this one that I do plan on holding for a while. After them, we have ABBV. I do like this stock quite a bit as well. Average cost of $72.10. 4.1 shares. 1.7% of the portfolio. Would like to add more on this one. Total return of $55 or 18.87%. Would like to add more, and certainly could be in the future. We have Gilead Sciences. Average cost of $70.28 on this one. Not a good performer, but most of this is as of recent, down 18% in the last 3 months. Rough for it, but overall, before that, we were performing pretty well. But since May, things haven't been beautiful for it. But down $23.75 or 11%. Still one I could add on to. I don't dislike it. We have Ford Motor Company. Ford. The recalls everywhere, Ford. Average cost of $9.23 on this. Not a good position for me so far. 70 shares. Overall down $156 or 24% downward. I don't like to see that. It's not a good performer for me. New York Community Bank, also not a good performer. It's at its 52-week low pretty much. Not good. $11.11 43 cents as your cost basis. 20.72 shares. Still a decent dividend payer on this one, so I'm not too upset with it, but down overall 57.42 or 24%. Not beautiful. This is a new one too for me, Charles Schwab. I did, if you remember from the previous one, these were TD Ameritrade shares, in which I had four TD Ameritrade shares, which have now converted to four Charles Schwab shares, and it's literally just happened today, so that's why you see the cost basis doesn't exist on this. So I don't know how that's necessarily going to work, how they're going to calculate that cost basis, but I'm curious with Robinhood what that looks like. But yeah, interesting. But I was up on my TD Ameritrade position by a decent bit. After Charles Schwab, we have Target. Love me some Target. This is a premium retailer here. $91 for the cost basis. 6.44 shares. Total return of $434 or 73% on this bad boy. We love that. We love that. Good return on Target. After that, we have another retailer not performing as well this year because, well, clothing retailers have been hit hard. Kohl's. Overall cost base of 25.82, I should say. 14.1 shares, nothing crazy, but total return now down $90, 91 cents, or 25% around there. Not good to see your position, cut by a fourth, but what can you do? I still want to hold it for the long term because I think there's value in there. We have Tapestry. After them, Tapestry has recovered quite a bit, I can't lie to you. Cost basis of $17.24. Overall 22.8 shares. This is a beautiful dividend payer when it's paying a dividend, so that's why I like this one quite a bit, but down $7.45 or 2%. Not crazy, but good recovery on that stock. After then, we have an online clothing store. I don't know why I said that so weird. Stitch Fix. Cost basis, this is a new position from this year as well in the summer. $15.36 on this one is the cost basis. 8 shares. Overall total return of $101 or 82.5%. Not too bad. Good for Stitch Fix. I like what they're doing, and I think they're going to remain pretty dominant. I love it. Home Depot, as you see here, Home Depot, average cost of $159.69. 1.01 share. Nothing crazy. This is literally since the dawn of the portfolio I've had this one share. But overall total return, though, up $118 or 73%. So I'm pretty happy in 3 years that I was able to get 70% return off of Home Depot. Can't lie. I like it. I like it a lot. After Home Depot, we have Coca-Cola. Coca-Cola, baby. Coca-Cola, decent base to the portfolio. $45.10 per share. 7.34 shares. Nothing crazy, but overall up $27.53 or 8.3%. Good dividend on Coca-Cola. It's just a very consistent stock. Trying to get that oxygen. We're talking a lot. We love talking. We got Starbucks here. Speaking of talking, we love coffee. Not really, just kidding. Average cost on Starbucks of $52.52. Pretty cool, right? 2.02 shares, up $69 or 65%. $69? Oh, it's $69, dude. Can you believe that? After them, iRobot. I love me some iRobot. Cost based on this one of $46.91. Overall, 8 shares. Nothing crazy, but I am up $271 on this one, or 72.3%. Good return on iRobot. You love to see it. I do love to see it. I do. After that, Micron. $45.19 per share on this one. This is just a cyclical stock if there are any. 5-year performance has been pretty good. Wouldn't you love to grab it in the $9 range? You would have. But guess who didn't? Because I wasn't back in the market in 2016. So overall, pretty cyclical. You just wild up and down in the past 3 years. Overall total return of $20.75, Overall, 4.5% up. So nothing crazy. Still, I want that thing to get to the 60s at some point. I'll sell it off at 60s. I've told myself I will if it goes back up. We have Cisco. Nothing exciting about Cisco, but overall, $38.91 per share, 5.28 shares. Total return down $2.88 or 1.4% down. Not a crazy return on that, but dividends on wow, Disco baby. Cisco pays a nice dividend. Garmin, I bought this one share because I was tracking an options play I made, which I made some money on, by the way. My call option made some money, and this also has made me some money, as you can see. Nothing crazy, though. 1.01 shares because of a dividend reinvestment, and $15 up or 19%. Nothing crazy, but, we take those. Then we have ADI, Analog Devices. Overall, $79.47 per share. 1.01 shares, again, because of dividend reinvestment. Total return of $36.45 or 45.5% around there. Not too crazy. HPQ, another position which is kind of boring. Which there's nothing wrong with the boring position. I can't lie to you. Overall cost basis of $17.80. Overall, also 13.88 shares. Nice dividend payer on this one too. I like that. Total return of only $16 or 6.5% is not too crazy. Next position besides HP, Activision Blizzard, pretty small position too. I can't lie to you here. Overall, my cost based on Activision Blizzard is $56.78. 2.01 shares. Overall, total return of $43.04 or 37.5% around there. Then we get into the real estate investment trust portion of this portfolio. This is some good stuff. This is where a lot of the dividend income comes from on this portfolio. Around $700 a year in dividend income. That's what I'm talking about, baby. Which I'll show you that here at the end. I'll show you a good overview of the portfolio as well as, dividend yield, stuff like that. So if you really don't care about the positions, I guess you can skip towards the end and find that. Haha, that's funny. Average cost base of $54.66 on this one, 21.34 shares. Dividend reinvestment's huge on this one, obviously. Overall total return, though, of $176.07 or 15%. Love Realty Income, the monthly dividend company. It's a good company. Good company. Then we have Iron Mountain. Cost basis of $32.14, 32.78 shares, a massive dividend payer on this one. Right now, yields around, I think, over 10%, to be honest with you. And it's sustainable. It is sustainable, believe it or not. That market value is pretty wild. $888.88, pretty wild, but total return down $164, not good, or $165, or 15.65%. Definitely a position I'm still okay with adding on to. Still okay with it. I love it. Then we have OHI. Good position here. I still want to add on to this one, but I'm up right now, so makes me feel weird. Very massive dividend on this one as well. $28.24 per share. What? Yeah. $28.24 cost basis. 22.62 shares, and total return of nearly $77 or 12%. After OHI, we have ABR. I love this one because, you want to know what? The dividend's also massive. Let's go. $8.19 per share, and capital appreciation is massive in case you're curious. 72.68 shares. I love this because every time I get paid a dividend, it pretty well reinvests 2 new shares for me. So it's just this is what we would like to call an unstoppable beast at this point. We want to build this position up big, and anytime I get a dip, I'm building it up big. Total return of $240 or 40% too. So good capital gain on that as well. Just like it. We just like it. Then after them, Apple. Talk about capital gain. Not this one. Apple Hospitality, again, based off of hotels, which is hospitality sector, in case you were curious. $14.23 per share. Used to be a very good dividend payer, which where you see these partials from. 65.63 in terms of shares, and total return down $240 or 25, nearly 26%. Can't wait for that dividend to come back at some point. When it does, I'll be a happy boy. 10 cents per month on that. Whoo-wee. Don't know if they're going to go straight back to that. They probably won't, but I'll take it. ARI, another big dividend payer. Cost basis of $11.68. 48.49 shares. Again, these dividends usually are, pretty big ones that'll reinvest, nearly 2 shares whenever I get it reinvested. You got to love that. Total return down $117.34 or 20.7%. So one I'm looking to add more of, undoubtedly looking to add more. We've got, after them, NRZ, kind of a sketchier one for some people, but the dividend's back to growing again. Cost basis of $10.03, 33.09 shares. Total return down $57 or 17.5%. Then we get into Prospect Capital, baby. So Prospect Capital, good stuff with Prospect Capital. Cost basis of $5.78. Capital return not beautiful, but again the dividend's good in this one. Usually reinvest for about half a share every time. Every month we get half a share pretty much in dividend reinvestment. 42.69 shares. Total return down $27.11 or 11% down. Then I don't really just want to look too high into these ETFs that I own, but we have SPHD, which I have 9.54 shares of. SPYG 3.01 shares, and again these are just ETFs, so they're not super exciting. SPYD 6.92 shares. KBWD, good dividend payer, 26.44 shares. KBWY, good dividend payer, 20.38 shares. DIV, we've got 10.84 shares. DES 2.03, and SNSR, we have 1 share. That's it for ETFs. NEO, massive winner on this one, obviously. And if you recall, again, I did own 100 shares of this, and I sold 75 of them off around the $14 range, which I know was a big mistake. But overall, with these 25 shares I have remaining, cost basis of $2.07, total return of $467 or 900%. Would have been nice to have kept those shares, but I really didn't foresee the continued movement on those. Next, we have our next big spec play that I'm building up is Watt or Energous. $2.95 on the cost basis, 50 shares, down $8.49 or 5.7%. And finally, we ended up with one that for some reason is just kind of strange. I don't know what's going on with the cost basis on this one, but it's not right. We have New Age Beverages, and I think it's because of the recent acquisition they made, so things are a little bit funky. 175 shares. I can tell you my cost basis is closer to 270, I want to say, so I'm down. This is by far my worst position. So I don't have an accurate number for you, but I have 175 shares, and I think this could be big in the future if it gets to the $5 range. I've made quite a bit of money. Doubling what I had would be pretty exciting with 175 shares. Not crazy, but again, can't expect a performance like NEO where I'm, 9 times my money I put in. Well, I would have been if I didn't sell too early. So that's the portfolio there. The only other thing I would like to bring up, which I didn't have pulled up, and I hope you apologize. You're okay with that? I hope you apologize. I don't know what that means. But I wanted to go ahead and bring this NASDAQ Smart Portfolio on to show you exactly what this portfolio does. Gives you a good idea as far as dividends and everything like that. So overall portfolio risk, my beta is at 1.35, which is usually, it's high for where this is at right now, but again, it's because there are some interesting stocks on there. It still says Gallmed's on there because it hasn't updated quite yet, but that doesn't exist. Blink charging doesn't exist on there either. So really this beta should decrease to be closer to 1. Again, that's just really volatility, as well as, just risk in general. Overall, portfolio dividend-wise, 3.25% yield, estimated $655 in annualized dividends, which actually it is higher than that, to be frankly honest. But it's okay. This isn't 100% accurate, but it is darn close. It is darn close. I can't lie to you. So I give this credit for being pretty darn accurate, but just off by just a little bit off. So I do hope that you enjoyed this and that you have a great one. We'll talk about the M1 Finance portfolio probably tomorrow or the next day. We'd like to do this in between the earnings seasons and just let it be happy.